Welcome back, everyone. I hope you're all doing well today, because there is a lot unfolding right now, and an overwhelming amount of noise surrounding the markets. And this is one of those critical moments where separating meaningful signals from pure distraction truly matters. We're seeing fresh updates tied to the Clarity Act, new information emerging from Washington, increasing macro pressure building across the globe involving Japan, Venezuela, and oil markets. And many people keep asking the same core question in slightly different forms. Do we really need to wait for regulation before XRP makes its move, or is something already unfolding quietly behind the scenes? Before we dive into all of that, if you follow Ripple and XRP, type in X in the comments, hit the like button, and let's jump in, because there's a misconception spreading right now that needs to be addressed early. Let's start with the Clarity Act, since that's where most eyes are focused. Eleanor Terrett confirmed this morning via a Senate Banking Committee spokesperson that the U.S. Senate Banking Committee will not be holding a market structure markup this year and is instead aiming for 2026. The most important takeaway here isn't the delay itself, it's the intention behind it. Chairman Scott and the committee remain engaged in negotiations on a bipartisan digital asset market structure bill, and they've made their objective very clear. They want to deliver clarity for the industry and position the United States as the global hub for crypto. Here's where many investors misunderstand the situation. A lot of people are telling themselves that nothing meaningful will happen until the Clarity Act officially passes. That story is easy to accept, but it's not backed by historical evidence. XRP has never required perfect regulatory clarity in order to move.
Some of the largest XRP rallies occurred during periods of terrible sentiment, regulatory uncertainty, and general disinterest from the broader market. Even last year, when XRP made a notable move, there was no finalized Clarity Act, no completed market structure framework, and very few people anticipated what was coming. So if you're waiting for fireworks the moment a bill is signed, you're already behind the way markets actually operate. Regulation doesn't create adoption. It accelerates activity that's already in progress. What we're witnessing right now isn't the beginning of adoption, but rather the expansion phase of infrastructure that has been quietly developing for years. The Clarity Act will absolutely benefit the industry as a whole. It will reduce friction, unlock capital, and bring more institutions into the open. But XRP doesn't sit idle waiting for permission to exist. This requires a shift in mindset. Markets don't move when regulation becomes perfect. They move when positioning is already finished and narratives finally catch up. By the time retail feels comfortable, institutions have already acted. That's why price moves often feel sudden and unexpected, because people are watching headlines instead of systems. This is also why XRP confuses those who only focus on charts. XRP isn't competing for attention or popularity. It's embedded within the financial system itself. That means progress appears as access, integration, and utility, not constant green candles. So when you hear 2026 associated with the Clarity Act, don't interpret that as a delay. Interpret it as confirmation, coordination, and formalization, while infrastructure continues advancing in real time. Markets don't stop simply because legislation hasn't crossed the finish line. That's why this discussion matters. While many are fixated on a single bill, other powerful forces are already moving.
Now let's zoom out and address the geopolitical headline that's causing anxiety, because this is where fear spreads quickly and facts often get overlooked. President Trump ordered a full blockade of sanctioned oil tankers moving in and out of Venezuela, and immediately speculation erupted about oil prices skyrocketing, inflation returning aggressively, markets collapsing, and crypto being crushed. That reaction is emotional. The reality is more nuanced when you look at the data. Venezuela exports roughly 900,000 barrels of oil per day, and this blockade impacts about 300,000 barrels daily. On a global scale, that's around 0.3% of total oil supply. It's not insignificant, but it's also not enough on its own to cause the massive oil shock some are predicting. So if you're expecting oil to explode overnight based solely on this announcement, the numbers don't support that conclusion at this point. What does matter is the broader context. This move isn't just about oil, it's about leverage, pressure, and control. Venezuela has been selling oil to countries misaligned with U.S. interests, and Trump has been clear about reasserting U.S. dominance in global energy markets. This is about tightening pressure, not detonating the system immediately. Crypto investors need to be cautious in moments like this. Markets often price in fear first, then correct once reality sets in. We've seen this pattern repeatedly. Headlines spark panic, risk assets pull back, volatility rises, and then capital repositions once people realize the world hasn't ended.
Historically, XRP and the broader crypto market tend to dip at the onset of geopolitical escalations, not because the assets are broken, but because investors temporarily shift into risk-off mode. Looking back at conflicts involving Russia and Ukraine or Israel and Palestine, the largest long-term gains came from those who accumulated during uncertainty, not those who sold into fear.
That doesn't mean ignoring risk. It means understanding where fear is justified and where it's exaggerated. Right now, Venezuela is something to monitor, not something to panic over. Oil affects inflation. Inflation impacts interest rates. Interest rates influence liquidity. That chain matters more than any single headline. Here's the transition point. While geopolitical noise dominates attention, something far more important is happening quietly within the financial system. Regulation is advancing, banks are moving, and stablecoin infrastructure is accelerating faster than most people realize. This is where things get serious. While most are distracted by headlines and short-term price action, the financial system's plumbing is being upgraded. The FDIC recently introduced a framework allowing banks to issue payment stablecoins through subsidiaries with a 30-day completeness review and a 120-day approval timeline. That may sound boring, but it's a major green light for traditional banks to enter digital assets in a compliant, regulated way. This is no longer theoretical. It's no longer pilot programs. It's a formal pathway. In simple terms, banks are no longer wondering if they can participate. They're being told how to participate. And once that door opens, it doesn't close. Connect this with recent developments. Ripple received official approval from the OCC. The FDIC outlined stablecoin issuance. Lawmakers are negotiating market structure. These are not isolated events. They're coordinated steps toward integrating blockchain into the existing financial system, not replacing it, but upgrading it. This is exactly where XRP fits. Stablecoins don't operate in isolation. They require settlement, liquidity, and bridges between currencies, jurisdictions, and balance sheets. Issuing a stablecoin is only half the challenge. Moving value efficiently at scale is the real problem, and that's what XRP was designed to address.
So when people ask why XRP isn't pumping yet, they're missing what's actually happening. Institutions don't buy infrastructure assets after the system is complete. They position during the build-out phase when things are quiet and misunderstood. This is why progress feels slow to retail investors. Banks don't announce every integration. Custodians don't broadcast back-end upgrades. Liquidity rails don't trend on social media. Yet these elements determine where capital flows over the next decade. Once regulated institutions can issue stablecoins, they immediately focus on counterparty risk, settlement speed, and liquidity efficiency. These are existential concerns at scale. XRP doesn't compete with hype. It competes by reducing friction where it matters most. What we're seeing now isn't chaos, it's sequencing. Regulation, banking access, custody, liquidity, yield. Each component locks into place one by one. Price reacts last. Now, let's address something XRP holders have waited years to hear. This is where the narrative shifts from simply holding to actually earning. News just broke that Doppler Finance is partnering with SBI Ripple Asia to explore XRP-based yield infrastructure and real-world asset tokenization directly on the XRP ledger. This is far more significant than it might initially appear. For years, XRP holders were told to simply hold, wait for price appreciation, wait for adoption, wait for regulation. That thesis still matters, but the market is entering a phase where ownership itself becomes productive. Yield changes everything. When you can earn on an asset without selling it, incentives shift entirely. This isn't DeFi gimmicks. This is regulated, institution-adjacent infrastructure built with long-standing Ripple partners. SBI isn't a random crypto name. They've been aligned with Ripple for years and act with clear intent. Yield tied to XRP means liquidity isn't just consumed by institutions, it can be provided by holders. This aligns with reports that platforms like ITR Capital are exploring XRP yield strategies heading into 2026, bringing institutional-grade custody, compliance, and tax-advantaged structures into play. Whether through IRAs or premium custody accounts, this is about positioning XRP for long-term capital strategies, not short-term trading. Once yield enters the picture,
XRP stops behaving like a speculative token and starts acting like participatory financial infrastructure. You don't need to sell it, you don't need to time markets. You can hold, provide liquidity, and let the system operate around you. That's a massive psychological shift. It also explains institutional patience. Yield systems aren't rushed. They're tested, regulated, and carefully integrated. But once live, they tend to persist. When holders realize they can earn while holding an appreciating asset tied to global settlement, behavior changes, selling pressure declines, long-term conviction strengthens. Many people are still stuck in the old mindset, believing assets only matter if they're constantly rising. Real wealth systems compound quietly before becoming obvious. Now, let's close this out, because this is where conviction is either reinforced or lost. The final piece right now is Japan, specifically the Bank of Japan preparing to raise interest rates to their highest level since 1995. This matters for global liquidity, risk assets, and XRP. When the Bank of Japan tightens, markets feel it. Volatility increases, risk assets wobble, short-term traders panic. If you're glued to charts daily, this environment will exhaust you mentally. This was never a straight line story. XRP has never moved in a straight line and never will. What's being built cannot be fully understood through short-term technical analysis alone.
Headlines change. Fear rotates from one macro event to another. But beneath the noise, the long-term drivers remain utility, liquidity, and real-world adoption. XRP isn't optional infrastructure. It sits at the core of global finance, where liquidity must move efficiently in calm or chaos. Systems don't choose assets based on hype. They choose reliability, speed, and efficiency. That's where XRP continues to position itself. Price won't be driven by speculation or influencers or short-term traders chasing headlines. XRP will move when liquidity demands it, and liquidity doesn't ask permission. The real challenge isn't predicting the next move. It's staying grounded as the system matures. It's understanding what you hold, why it exists, and what problem it solves. Once you do that, daily noise loses power. Looking back, this period won't feel surprising. It will feel obvious. Adoption is happening now, quietly, methodically, without fanfare. That's how real financial infrastructure is built. The best part of this journey is still ahead. XRP has already produced life-changing outcomes before, and nothing about the current trajectory suggests that chapter is over. If anything, the foundation is stronger than ever. That's all for today. Share your thoughts in the comments. I read them all. Thank you for your time, your support, and your patience.